The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Hey, happy hump day, everyone. Welcome to another edition of Breakout Investing on TFNN 877-927-6648. That is the number to use if you want to give me a call and talk about this market. Breakout Investing used to air 2 times a week on TFNN. It now airs daily from 3 to 4 Eastern. Don't forget, you can always pick up my show as a podcast on iTunes. Feel free to leave a review if you're over there. And don't forget, you can also listen to all TFNN programming on your smartphone. Very easy to do. You plug those earbuds in, open your smartphone browser, type in tfnn.mobi, tfnn.mobi, and you can get the stream that way as well. I'm going to be looking at some charts on the program today. If you want to look at those charts live right along with me, Tiger TV is how you do that. Right on the homepage of TFNN.com, the show is carried live on Channel 1, and it is archived on Channel 13. And Tiger TV is also viewable on your handheld device as well. I'm going to start by taking a look at the CBOE Volatility Index. Boy, this is still would fall under the category of technically troubled here. The VIX right now only down about 12 cents, about 0.8% to 1559. But you can see it is having some trouble here around its 50-day moving average. Tried to get back above the 50-day line last week, plunged below it last week, tried to rally, and it is once again below the 50-day moving average. So the VIX, to me, still not showing signs that it's going to head meaningfully higher anytime soon. But then again, you never know when a really negative headline is going to hit this market to cause some selling in stocks and probably bring buyers into the VIX. But technically, it still looks broken here to me. Let's just check on the major averages here. Start with the NASDAQ Composite. We'll see the index working on its second gain in a row. Distribution, higher volume decline, still relatively well contained in the tech index, but the NASDAQ right now up 7 points, 0.2% to 3127. You can see still holding above its 50-day moving average here. A key support level at this point at 3066. S&P 500. Let's see what that is doing today. S&P 500 looking to make it 3 in a row here. Hasn't really made much progress over the past 3 sessions, but it is up close to 2 points today to 1447. Key support right now for the bogey would be 1417, call it 1418. That's its 50-day moving average as well. And the Dow in the news today, let's take a look at the Dow Jones Industrials. It is negative, but not by much, down 8 points to 13,474. The news today inside the Dow, shares of Hewlett-Packard. They had Analyst Day today. Check out shares of HPQ. It is really getting taken to the proverbial woodshed, down 11% to $15.25. Definitely a broken stock for several months headed into today, but they had their analyst day today, and basically CEO Meg Whitman called 2013 a, quote, fix and rebuild year, end quote, for the company. It forecast fiscal 2013 earnings between $3.40 and $3.60 a share, well below the current consensus estimate of $4.18. So right when you thought the bad news was all priced into Hewlett-Packard. Apparently not, as the stock is down 11% today. Again, last trading at 15.25. Volume on the exchanges today, same old story. Really not seeing a whole lot of volume in the market today. We are tracking slightly higher on the NASDAQ. Yesterday on the NASDAQ, volume was slightly below average at 1.58 billion shares. Again, we're about 4% higher than that today, so another low volume session. Yesterday on the New York Stock Exchange, volume fairly light at 591 million shares. We are tracking just slightly higher, maybe 2 to 3% higher than that today. But all in all, it's still a market here that, I heard somebody describe it as meandering today, which is probably a good way to describe it. It's certainly not doing anything wrong. It's not breaking down technically. There's still a lot of stocks out there that are acting well, and you're going to have your bad performers like Hewlett-Packard, and, we had these, weak guidance recently from FedEx and Norfolk Southern, and believe me, there are going to be plenty of bad stories out there, but there are probably more good stories than bad stories, at least when it comes to the overall technical picture of leading growth stocks that I follow. Distribution in the market remains well contained, very well contained in the NASDAQ. We've only seen 2 higher volume declines in the tech index over the past several weeks. It's been a little more pronounced in the NYSE indexes, particularly the NYSE Composite and the S&P 500. Headed into today, the S&P 500 showed 4 higher volume declines in the past 9 trading sessions, but 2 of those declines came on September 20th and September 21st. I mentioned that on yesterday's show, but it bears repeating because though there were 2 higher volume declines on September 20th and September 21st. Let's see, where was it here? Yeah, here and here. September 20th and September 21st, if you're watching in Tiger TV. But on both of those days, the S&P 500 gave up less than 1 point. So on September 20th, it really didn't feel like distribution at all because the index managed to close all the way up near its session high after early weakness. The next day on September 21st, it was a heavy volume reversal, but volume was skewed a little bit by options expiration. So it was a more bearish day on September 21st. But overall, I'd say that, distribution in the market here remains overall fairly well contained. So for that reason, as I've been mentioning in recent shows, I am just sort of letting what I have work here in the Ultimate Growth Stocks model portfolio. Have a lot of stocks that are acting right, as it were, and until they start acting wrong, and that's a possibility, but without any sell signals, there's no reason to start to raise cash here and get too bearish on the market. I know that's been a consistent theme, but it's going to remain the theme until the market tells me to do otherwise. So we mentioned Hewlett-Packard in the Dow. Some other Dow components, I'm still encouraged by the overall action in financials. It's not a sure thing that they are ready to stage upside breakouts here. If they do, it's going to take new institutional money coming into these stocks. Third quarter earnings season, certainly a lot of question marks about the overall quality of third quarter earnings. S&P 500 firms overall are expected to produce a decline of almost 3% from a year ago. But financials are expected to be the bright spot. We should see earnings from the financials in the third quarter as a group up close to 10%. That was the most recent estimate I saw. Shares of Citigroup today outperforming nicely, up 1.9% to 33.89. Now Citigroup, you have a swing point here just over $35 a share. I think it's $35.25. So, this is what I would consider a fairly, bullish chart in the financial space. Of course, Citigroup is a Dow component. And then JP Morgan Chase, which actually is set to report earnings 1 week from Friday. This is another outstanding technical setup. JP Morgan Chase up 16 cents today, 0.4% to 40.78. The swing point for JP Morgan would be 42.09. So both of these technical structures are, what is known as cup with handle patterns. Of course, Bill O'Neill over at Investors Business Daily, was the person who coined that bullish technical setup, and his model book studies the cup with handle pattern has been seen throughout market history. It has often been a launching pad for successful technical breakouts in the past. So, that could be the catalyst for the market here. Lots of talk about tech earnings maybe not being up to snuff, and we know the energies, the material earnings should see year-over-year declines there as a group, but financials could be a bright spot in earnings, and hopefully JP Morgan and Wells Fargo. They both report a week from Friday, and they'll get earnings in the financial sector off to a good start. Got the debate tonight, first presidential debate between President Obama and Mitt Romney. A recent Gallup poll showed Obama leading 49% to 45%, but it's not all bad for Romney, because a USA Today Gallup poll recently put Romney ahead of Obama by the same percentage, 49 to 45, when it comes to the economy. The basic question was who is better able to handle economic issues at this point. So Romney has a little bit of a lead there, but Obama overall seems to have the upper hand. So that presidential debate is tonight. Taking a look at crude oil, sort of a counterintuitive move for crude oil today, down 4.1% to 88.14. This despite new data from the EIA, the Energy Information Administration, that showed crude inventories dropping by 482,000 barrels last week to almost 365 million barrels. The consensus estimate was actually looking for a big increase of 1.5 million barrels. So an unexpected drop. Still a lot of selling in crude oil today, 88.14. Check in on a very liquid ETF that tracks the spot price of West Texas Intermediate light sweet crude oil. You see the USO here, United States Oil Fund, under a lot of pressure as we speak, down $1.45, 4.3% to 32.57. Another vulnerable-looking ETF here. Sees in September some resistance at its 200-day moving average, fell below the 50-day moving average, and it is taking out some near-term support levels today. So technical picture of the USO looks pretty weak here. U.S. dollar index up a little bit, but not affecting the stock market too much. Recently trading at 79.96, up about 22 ticks. Bond yields slightly higher today. They have been under quite a bit of pressure over the past week and a half, 2 weeks. The 10-year yield at 1.63%, the 30-year at 2.83%. Let's take a look at a couple of stars of the day here. How about Sarepta? I remember taking a call on the show not that long ago from somebody inquiring about this company's prospects, and I talked about the relative price strength that the stock was showing, definitely under some accumulation, but I really couldn't endorse it because it just looked to me like it was extended in price. And anyway, Sarepta today up huge, up 181%, if you can believe that, to $42.14. This was a $15 stock yesterday. We'll come back after the break and tell you what's driving shares of Sarepta today, but pretty encouraging data from one of its key drugs. 877-927-6648. Stick with me, folks. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. All the major averages are higher now. The Dow was negative for a little while, holding up pretty well considering the news from Hewlett-Packard. We looked at Hewlett-Packard earlier in the show. Shares down about 11% on weak 2013 earnings guidance from Meg Whitman at Analyst Day today. Right now, the Dow is up 3 points to 13,485. NASDAQ up a little more than 10 points to 3130, and the S&P 500 up a little more than 3 points to 1449. Before we talk about Sarepta and the 180% upward move for the stock today, didn't mention gold. I always do that at the top of the show. Gold for December delivery added $4.20 today to settle at $1,779.80 an ounce. Taking a look at the weekly chart of the GLD here, the Spider Gold Trust. Still flirting with a breakout here. I mean, money has been flowing into gold for several weeks now. It is a bit ironic that even though it seems like a crowded trade to many, the GLD is still setting up here for a meaningful upside breakout. From this point, it could take out its late February high of 174 over here. It actually could drift lower. I mean, the GLD right now trading at 172. It could correct even down to 165, form a little handle area here, but I expect that's probably going to be a pretty good support level for the GLD if it does come down that far. So crude oil up on a day when the dollar is up too, so still a bit out there for gold. All right, SRPT. We mentioned SRPT before we went to break, and remember getting a call on SRPT several weeks ago from a listener, but right now, again, stock up 180% thereabouts to 41.80. News here is that its experimental drug improved walking ability in patients with a rare muscle disorder called Duchenne muscular dystrophy. It's basically a genetic disorder that causes progressive muscle loss in boys. So that is the reason the stock is sharply higher today. So congratulations to Sarepta Therapeutics longs. Interesting day of price action yesterday for the stock. It was actually a reversal in heavy volume. So pretty bearish price action yesterday. It hit an intraday high of 17.12, a low of 14.84, and closed at 14.99. Lost $1.54 on the day. So it was a pretty big percentage decline, and volume was pretty heavy. It was above average, so there were some sellers in the stock yesterday. Tough stock to hold, basically, but those that new owners that did hold on and endured some volatility are certainly being rewarded today. Home builders up nicely today after some recent selling pressure. Let's take a look at the ITB, the iShares Dow Jones U.S. Home Construction Index Fund. It is up 4% today. Impressive move and some decent volume as well, trading around 2021. Still not interested. I owned this for a while back. Took some profits a little bit early, but that's gonna happen every now and then. But don't think it's still a buy up here. Home builders, I feel just a lot of good news has been priced in quickly here. I'm optimistic about a continued recovery in the housing market in 2013, but I would really like to see the home builders, including ITB, consolidate for a little while, but a nice day of outperformance for the ITB. Let's check in on shares of Lennar. We're going to see big percentage gains throughout the home building sector today. Lennar making a big move, up 6.8% in decent volume to 37.36. Again, a 5-6 day consolidation. Really not enough to shake out sellers in the stock. So I think it's just a risky buy up here. Would like to see Lennar consolidate a little bit more. Standard Pacific, company with a very strong balance sheet. It is priced under $10 a share. It is trading at $7.17 right now, up 9.1% on the day. A nice bounce off the 50-day moving average. You can see how that 50-day moving average in the past has been support for Standard Pacific. So this is an interesting home builder as well. So home builders acting well, and then related plays. How about Ocwen Financial, OCN? I know Doug Cass over at Real Money has been talking about this stock. Ocwen up 16.6% today to 33.76. Earlier in the day, I didn't see any news on the stock, but it is a big gap up in huge volume. Ocwen basically services residential and commercial mortgage loans. If we look at a weekly chart for Ocwen Financial, we'll see the last breakout for this stock was all the way back in June, right in this area here. So you break out in June over, $16-17 a share, and then you run up almost double now to 34. So very extended. Wouldn't touch it up here, but an impressive move. We'll take a look at a couple of similar companies here when we come back. You're listening to Breakout Investing on TFNN. Ken Shreve with you. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Yeah, don't forget about the Great Panther Silver Halloween giveaway at TFNN. They're going to be announcing a winner every broadcast hour. And we broadcast throughout the day at TFNN now from October 29th through October 31st. Every hour there's going to be a winner. On October 29th and 30th, TFNN will give away a half-ounce piece of silver every hour from 9 a.m. to 6 p.m. Eastern Time. And on Halloween Day, October 31st, we'll give away a full 1-ounce silver piece each hour from 9 a.m. to 6 p.m. Eastern. Right on the homepage of TFNN.com, you can register, so check that out. All right, so big day for Ocwen Financial. Stock is very, very extended up here. Don't want to chase it. Let's also take a look at ASPS, Altisource Portfolio Solutions, ASPS. A big move for this stock today as well, up 14.8% to $101.10 a share. Altisource provides real estate, residential mortgage, asset recovery services, other technology products. Pretty good fundamentals here, but a very, very solid stock. Let's take a look at a weekly chart for Altisource, and we'll see a double bottom breakout for Altisource back in June as well. In fact, you know, this is, I actually bought this stock on the breakout for the Ultimate Growth Stocks model portfolio. It ran up in price. I sold and took profits. Sometimes you're going to sell a big leader too early. You like that not to happen too often. I think there may still be some Ultimate Growth Stock subscribers that are in this name. I know I heard from one a little while back that was still in it, and the stock, it never really broke down. I just got a little jittery, thought the market was ready to come in, so I thought it would be safe to take some money off the table. So took profits a little early in Altisource Portfolio Solutions, but longs have certainly been rewarded in this stock. But this is again a situation why it's important to pay attention to heavy volume based breakouts. Altisource again broke out in June from a bullish double bottom pattern, but it is now extended in price. I suppose you could call this a little bit of a flat base breakout here, but still, to me, looks like a risky buy up at current levels. And another similar company here, Walter Investment Management. This is a company that invests in subprime, non-conforming, other credit-sensitive residential loans. Here you had a breakout in August. Okay, breakout in August over $25 a share. Now it is a $40 stock. So you want to be careful not to chase these stocks. Chasing stocks, as I say incessantly, is an easy way to be sitting on a loss quickly in a trade. So even though all three of these stocks moving big today, just be careful about chasing them. Economic data earlier today. We had the ADP private sector payroll report that showed growth of 162,000 in September, above estimates for 133,000. Now, we had, I think, 3 straight months now where we've seen pretty good readings in the ADP number and not so good readings in the Labor Department report on Friday. So other tidbit of the ADP data earlier today was that August data was revised lower, not by much, to 189,000 from an initially reported 201,000. This coming Friday, of course, a non-farm payroll report. The estimate is for job growth of 120,000 after 96,000 growth in August. Of course, market will be looking at revisions here. Hopefully we'll get a good number. Unemployment rate expected to hold steady at 8.1%. Tomorrow, we've got the release of the Fed minutes from the September 12th, September 13th Fed meeting. We'll see what the Fed minutes have in store. And let's see, what else do we have Thursday? We've got the weekly jobless claims data. That always comes on Thursday, and then factory orders for August. Other stocks in the news today, let's check in on shares of Netflix. Citigroup had some positive things to say about Netflix. Good technical move for the stock today. It is up 9.6%, a one-day 9.6% move higher for Netflix to 61.88. Still looks like a broken stock to me, even though it did manage to climb back above its 50-day moving average today. Anyway, Citigroup reiterated its buy rating on the stock, saying that the valuation is reasonable here and that growth prospects still look pretty good for the nascent field of internet video streaming, which Netflix is clearly involved in. So there's probably a pretty good chance that Netflix has put in a bottom here. Whether or not that means it is, getting ready to, run over $70 a share and higher, I think there are still too many question marks about the earnings visibility for Netflix. The company still faces a lot of cost issues and challenges, so not interested in Netflix myself, even though Citigroup had positive things to say about the company. Family Dollar Stores came out with earnings earlier today. Good day for the stock. It gaps up. It is up 3.7% to 68.41. Not a whole lot of leadership in the dollar store space these days. You can see Family Dollar Stores is working on the right side of a base here. Stock was really under a lot of selling pressure during the summer, hit a low of around 61 in late August, has been working its way higher, and looks a lot better than it did certainly in August, but still has more work to do to complete its base. Steady growth at Family Dollar Stores. Earnings were up 14% from a year ago to 75 cents a share. Sales were up 11% to $2.36 billion. Same store sales up 5.4% in the quarter, and for fiscal 2013, the company forecasts forecast earnings of $4.10 to $4.40 a share. It was really right at the midpoint of the $4.22 that analysts are looking for. The news wasn't so good at Monsanto. This is interesting because there were really no sellers at all in Monsanto stock ahead of earnings, but there are some big sellers in the stock today. To its credit, it is holding above its 50-day moving average. Shares of Monsanto still down $2, 2.2% to 88.57. Monsanto known for its seeds, of course, and also agricultural products. That Roundup spray where you can kill weeds and dandelions in your yard. I believe that's made by Monsanto. But numbers were not very good. They lost 45 cents a share. Sales were down 6% from a year ago to $2.1 billion. That was also below estimates. And then they guided 2013 earnings a little bit below expectations. Analysts were looking for $4.38 a share. Monsanto said expect $4.18 to $4.32. Don't have a chart for LifeLock, but the company went public today. Kind of a disappointing IPO. LOCK is the ticker symbol for LifeLock. It's an online provider of identity theft protection services. And let's just see. This isn't going to show a chart, but it is going to give me where LifeLock is trading at $8.60, down 40 cents. It priced at $9 a share, so it is below its offering price. It was expected to price in a range of $9.50 to $11.50. So it priced at $9, below the expected range, and it is trading below that $9 level today. And also another IPO, JMI. New issue here, first day of trading, Javelin Mortgage Investment, a real estate investment trust, priced at $20. It is also a little bit below its offering price, trading at $19.51. So a couple of other IPOs set to go public this week on Friday. Dave & Buster's mentioned that one yesterday, PLAY. I think that's going to start trading on Friday. Proposed price range of $12 to $14 a share. And then also Fleetmatics Group, FLTX. This is a software as a service firm, provides fleet management solutions. The company is expected to price between 15 and 17 and trade under the ticker symbol FLTX. All right, let's check in on some other stocks here that I've been watching recently. I think it was just yesterday, Phillips Van Heusen. It's PVH now is the company name, but PVH stands for Phillips Van Heusen. Yesterday, the day before, the company raised its earnings guidance a little bit, saying its Tommy Hilfiger brands, its Calvin Klein brands are doing well. Stock is up 1.8% today to $94.60, the last for Phillips Van Heusen. And let's take a look at a weekly chart here, and you still see a pretty nice looking technical setup here. I mean, these types of charts are worth paying attention to. They've been known to deliver breakouts in the past, but they're not going to work until you get fresh new institutional money coming into the stock. That it could be starting to happen here. It's definitely worth watching for a technical breakout over 95.98. Fundamentals are relatively strong at PVH, and good company, good stock, good fundamentals, good chart. Nothing not to like about it here. So Phillips Van Heusen, interesting. And let's take a look at QIHU. This is Qihu 360 Technology, based in China. Stock is up 2.6% today. It's been under selling pressure in recent days, but still holding above support. Looking to make it two in a row today, up 2.6% to 23.47. This is a company, again, based in China. They provide internet mobile security products in China. They recently launched their own search engine, and that has caused some selling pressure in shares of Baidu. But let's take a look at a weekly for QIHU, and a reasonable technical setup here as well. Thought a breakout over 24.88 was taking shape, got pulled back a little bit. Notice it's still holding its 10-week moving average here. So still want to keep an eye on this one. Technically, it has not broken down by any means. In fact, you still have a cup with handle base working here, and a company with good fundamentals as well, which is important. So it's more than just a good stock chart in my book. You want to have a good stock chart. You want to have a stock under accumulation, good technicals, but you also want to have a growth story that is supporting the stock's price move. So Kihu is under accumulation. That's a positive. What I like about the fact is that the company just recently turned profitable in 2009. In 2011, last year, they earned 51 cents a share. They're expected to earn 71 cents a share this year. That would be up 39% from 2011. And next year, they're expected to earn $1.09, which would be accelerating growth, up 54% from 2012. So there is a growth story here, interesting product, and definitely causing some problems for Baidu, which again has been under quite a bit of selling pressure lately. Shares of Baidu today down 34 cents to 112. If this doesn't look like dead money, I don't know what does. Baidu, a technically damaged stock at this point. Let's take a look at a current model portfolio holding that is starting to show signs of life here. LinkedIn, they operate an online professional network, has been an outstanding performer since its IPO. Since its recent IPO, up 2.4% today to 121.59. So another stock that's still holding gains nicely here. The weekly chart of LinkedIn is very compelling. You've probably heard a lot of positive analyst chatter about LinkedIn. This is another nice cup with handle pattern taking shape here. This would actually be known as a cup with high handle because LinkedIn several weeks ago took out its high over here, but notice how it's drifting lower, trading relatively tightly here. That brings a new swing point into play here of 125.50. So not out of the question that we could see more upside in this stock as well. Of course, when a stock breaks out, you always want to see heavy volume. You want to see signs of fund buying. You want to see signs of institutional buying. Hopefully that will happen soon in LinkedIn. SunTrust today made positive comments about LinkedIn, and that is the reason for the stock's outperformance today. Also wanted to take a look at shares of Yelp, Y-E-L-P. This is it's volatile, it's speculative, but there is a growth story going on at Yelp too. It's not profitable yet. It's not even expected to turn a profit this year, but next year they're expected to earn 6 cents a share. So that would be their first annual profit. Buyers have come into the stock recently. It is showing signs of accumulation, so it's interesting. It's not the best looking of bases. It is getting close to a swing point here of 28.93, but see if I have a weekly chart for Yelp. Yeah, I do. There it is. You can see this is just not the best looking of bases, but you're looking at a stock that is on pace for 6 straight weekly price gains that is definitely under accumulation. So a lot of these newer names with interesting products and services are catching a bid here. So we'll check in on shares of Yelp down the line and see if it continues to outperform the market here. Shares of Stratasys. As we move on here, Stratasys has been under quite a bit of selling pressure. Up nicely yesterday, up nicely again today, up 6%. A little bit of volume in the stock today. It's last trading at $60.01. Stratasys makes 3D prototyping systems for a variety of industries, automotive, aerospace, industrial. The issue here is that it's still a base building stock, and even though it's trading at $60 and a penny, still trading underneath resistance here, potential resistance at 62.77. So this one's not out of the woods yet. I still think there's technical damage for it to overcome. Still not a buyer. If it completes a base and stock shows renewed signs of accumulation, maybe I'll get a little more interested, but not right now. We'll be right back, folks. Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Taking a look at shares of MasterCard. Nice move for MasterCard today, up 3.3% to 472.82. You did have a technical breakout for MasterCard over a swing point of 461.79 today, and a pretty good juice behind the stock. So, again, the rule on buying breakouts is you don't want to chase a stock when it moves for more than 4 to 5% past a swing point. To me, even though the move is big in MasterCard today, still looks like it's within buying range here. Swing point of 461.79. The last price at 472.82. So bullish move for MasterCard today. And a couple of other interesting setups out there to watch. Salesforce.com. Yes, a high multiple stock, but it is getting into position for a breakout try over 161.90. This is... again, when I go through my screens on a daily basis and, I hear the bear arguments out there, I know about the fiscal cliff is on the horizon, and I know third quarter earnings season may be a little rough around the edges, and there's a lot of things to worry about, the unemployment rate and, unemployed people in the U.S., European negative headlines, when you go on and on and on. But when you see these stocks acting like they are in the market, you really have to pay just as much, give just as much credence to that as well. So Salesforce here up 2.7% today to 157. It is flirting with a breakout here over 161.90. So Salesforce.com also looking interesting here. Let's check in on shares of another one I'm following here, a Russia-based search firm called Yandex. It is forming a handle area as well, just kind of not doing much over the past 3 trading sessions, just kind of holding tight here at 24.61. You've got a swing point for Yandex, just over $25 a share. So Yandex, another stock with good growth prospects. They basically do what Google does and Baidu does in Russia. And again, booming internet usage in Russia has been good news for shares of Yandex. So still a lot of decent technical setups in the market out there. Some other ones, Lululemon made a nice move yesterday. It's giving back some of its gains today. Not a broken stock by any means either. Lulu down $1.32 today, 1.7% to 75.03. Not out of the question that you could see a breakout in this name as well. So as many bad headlines as there are in the market, there are some good ones as well. I've been talking about the U.S. dollar index. At last check, it was a little bit higher today, but let's check in on the dollar here and just look at a chart as of yesterday's close, and we'll see a chart here that is still broken. It's got some significant resistance to work through at 80.71, 81.28. It is not in an uptrend yet. It's possible it could go into an uptrend, but not likely in the near term, in my view. So that could be good news for the stock market here. I look at an ETF like the TLT, the iShares Barclays 20-plus year Treasury bond fund, seeing it face resistance here at its 50-day moving average. This is another one where it's possible that money could start coming into bonds again, but I'm not so sure. With yields as low as they are, a good argument can be made that bonds are just not a compelling investment right now. And if money's not going to go into the bond market, why not go into stocks? So I still think there are reasons to be optimistic between now and the end of the year. We'll see how it all plays out. Coming up next, the Tom O'Brien Show on TFNN 4 to 6, next 2 hours. I'll see you back here tomorrow, Thursday, 3 o'clock Eastern. Have a great afternoon, everyone. Take care.